On this episode, we talk to Mark Jones from Fit Out Finance. We talk about how he got started in the industry, about how pivotal Fit Out Finance can be for a business, and his outlook on the future, and much more. Now, time to spend 30 minutes in finance.
Thank you, David. I'm Mark Jones. My business is Fit Out Finance, which, as the name suggests, specialises in providing funding for premise fit-outs.
Perfect. And thank you for coming on, as I said. And interestingly enough, one of our viewers called Jay Johnson actually wanted somebody that does more sort of unique finance things, which is why I reached out to get in touch with you. And I don't think I told you that before, but little shout out to them. So thanks for that suggestion, and thanks again for coming on, Mark. Are you able to give us a little bit of a background into sort of what got you into the industry, and just walk us sort of from how you got in? Have you always been in finance? And if so, obviously how you got started and what you did to get to where you are now.
Yes, so thinking about this made me realise that I've been in the finance industry for 40 years.
Wow.
Which is a little bit of a frightening thought for me. I joined way back when. I'm what we call one of the last of the traditionally trained finance people. Back when banks owned big finance companies, and they used to recruit people fresh from college, send them on training courses and teach them in the ways of finance.
Nice.
So I joined Lloyds Bowmaker, which, as the name suggests, was owned by Lloyds Bank. They sent me to Edinburgh for 4 weeks and trained me. Obviously, I knew everything because I had a business degree. And they taught me all about finance.
Was it? Yeah. Were you always interested? Obviously, if you did a business degree, was that the sort of route that you were aiming to go down? Were you always sort of steering towards that, or did it just sort of fall into your lap?
I'd like to say I had a clear vision. I got offered a job with a company car and an expense account, and I took it. But I've never in my life dreamed of going into banking or finance or money. As I
Funny
say,
how
it was
it
a long
works.
time ago, so it's obviously worked out for me. Yeah. As I say, the training was excellent back then, and even to this day, whilst certain fundamentals have changed and moved on, I still actually take away a lot of what I learned at Lloyds Bowmaker and apply it to the way I run the business.
Where did you then move from there?
So I spent 2.5 years at Lloyds Bowmaker. They were very conventional, and old people will know this, but it was 60-70% of it was about the types of equipment you can finance. And essentially it came down to, does it have a serial number? Can you get money for it at an auction, and can you pick it up and take it away? Or in some cases, get a machine to pick it up and take it away. And if you didn't tick those boxes, it couldn't be financed. So it was, you might say, was somewhat restrictive. But then I moved to Allied Irish Bank, who were far more restrictive. They were more open-minded in the types of business they would finance in terms of startups and things. But essentially, they said if it doesn't have wheels and tracks, you can't finance it. So by default, I became something of an expert in financing construction equipment, in particular mobile cranes, which really was my introduction to niching, to finance niches. I took that, I built on that, and in 1988, the year is very fresh in my mind still, one of my customers said, rather than working for someone else, why don't you just go out and be a broker and finance it yourself? And he even gave me some money to do it with.
Wow.
So I fell into finance broking in 1988, which was, again, quite some time ago.
Yeah, that is a nice push from them in order to give you that.
It's popular to talk about how difficult things were when you started. I'll say the opposite. It was incredibly easy. The construction industry was booming, and the finance industry was diversifying. So what's now known as alt-fi, or alternative finance, was in its infancy then, and of course we didn't know the terminology. but it was very much about not using big banks. It was about using specialist lenders.
Yeah.
I had a batch of customers who wanted to finance a lot of mobile cranes. Back then, the unit cost of a mobile crane was 100,000 ish. They didn't really care about the name above the door. They wanted someone who could finance mobile cranes for them quickly because they were growing rapidly. We had lenders banging on the door. We had 125 lenders at the peak, and we didn't go looking for them. They came looking for us. So it was an exciting time in the industry. Things were changing quickly. And first 2 years, we did really, really well. And then the recession hit, and we didn't do very well.
Yeah, I can imagine. The construction took a little.
Things changed a lot. And I mean, I give it warts and all because, of course, it is very much the truth that the tough times are what really forms us and educates us.
Yeah.
As I say, anyone can do it when it's easy.
Most definitely.
And so we got to a point in the early 90s, probably about 92, where things were dreadful. Our customers had gone bust. The construction industry had been hit like nobody's business. The odd time you got a construction company that wanted finance, there were no lenders willing to lend to them. So we were in quite a dark place back then. So yes, from a very easy start, we sunk into a very, very bad position to be in. One way or another survived it. And coming out, it was fairly obvious that the construction industry wasn't where we needed to be. I did a little bit of looking around, and we discovered this thing called soft asset finance, which is very well known now. But back then, the idea of financing computers was very sexy indeed. In fact, the mainstream lenders had a bit of a view on computers that you can finance half of the hardware.
Yeah, because it's interesting, obviously, to kind of where you've got to. So on the computer side, is that where you sort of started focusing in on initially then after?
Well, that was the mainstream of soft assets at the time. It was becoming a thing, and we found to our shock that you could even finance computer software on its own.
Wow.
I mean, these were revelations. This is stuff people do day to day now.
Yeah.
Back in the early 90s, this was quite revolutionary. And I had people who had trained me in asset finance coming to me and saying, "Can you finance computers?" I think suddenly these people who knew everything were asking me for advice and information, which was quite lovely, really.
How did that work back then? Because obviously, it seems fairly normal now where you can get obviously interest-free credit and the stores will offer all sorts of things for you. But obviously was it mainly working for really large firms that needed, say, like 100 computers and really expensive sort of software? And how did that actually work? Sort of was it just a set percentage of the purchase price, or what did they do? And what was the sort of interest rates on those things?
No, so I've always been more inclined towards owner-managed businesses. But bear in mind, your average desktop then was, £1,500, £2,000.
Yeah.
It would be a small network. Networks were big talk at the time. So maybe a 5-7 user network, £10,000, £15,000. Rates nothing like what I was used to, because of course in the hard asset industry, I think it's still the case to this day, you're haggling over the fractions of a percent. When you're financing something that no one realized can be financed, is really just a case of, wow, can you get us the money? So
Yeah.
Rates, you have to be competitive. You have competition, but you're certainly not down you're not haggling on the fractions, put it that way.
Yeah.
It's more about finding someone who is prepared to understand what it means. And it's a world I exist in to this day. It's not computers anymore, but I still exist very much in that world of financing things that people really need, which are secondary to their business.
Yes. How's the sort of business moved on for you then has it been fit out since then, or have you?
No, so we went along fairly well. built a fairly credible brokerage, just really doing soft assets and various things that, you know, the opposite of hard asset finance, if you like. That went along nicely. If I cut forward to the banking crash, 2008, 2009, where I made two big mistakes, which I'll freely admit to, one of which was sort of made sense, and the other of which was very foolish. So the first one, which made sense, and I understand why I did it, I thought the banks aren't lending. So now I am going to focus on being not a bank. And I'm going to go to all the bank managers I know and ask them to pass me their customers. That didn't work because when banks don't lend, what happens is bank managers disappear and hide. Sometimes they get made redundant.
Yeah.
That bit wasn't a good plan, even though it made a lot of sense to in the thought process. The thing that didn't make sense, which I sort of regret doing, except for the fact I learned a lot from it, was I stopped doing soft asset finance. I tried to offer all sorts of finance to all sorts of businesses. I became Mr. Generalist. And if there's one business lesson I preach to everybody now, it's the quickest way to become invisible is to try to do everything for everyone.
Yeah, I think there's a popular saying, at least in the States, because it rhymes better, is that the riches are in the niches, which we say niches. So yeah, it seems to kind of make sense. And obviously from there, was it just a case of going, alrighty, it's all sort of gone a little wrong? And how did you sort of build yourself back up from there?
So I reached a pit. Funny enough, I was doing okay. We were doing deals, but there was no joy in it. There was no real buzz or excitement in it. It really was a case of finding ways to get people into debt, which isn't a pleasant place to be. We're in the finance industry. We're all walking a little bit of a line between being money lenders and helping businesses.
Yeah.
And I wasn't on the right side of that line, or I was right on the line, or whatever. And I knew that I had to get back on the right side. I had to have some pride in what I was doing, not just lending money to earn commission.
Yeah.
So I was in the fortunate position where I could step right out of the business. I think for a period of time, I convinced myself I'd left the industry, even though I still had a website and I still responded to emails, so I knew I hadn't left the industry. But my mindset moved right out of it. And I went out, I even drove vans, I did all sorts of things just to get my mind straight. What I discovered then is I actually got involved with a couple of government schemes, one of which was called the NEA scheme, which helps people on job seekers, or helped, it doesn't exist anymore, helped people on job seekers to go out and start a business. And also the startup loan scheme, which was sort of spun out of the NEA scheme. I worked with them initially as a volunteer mentor, but then I started delivering courses, doing loan appraisals, quite a lot of things I did with them for a period of time, which helped me a lot because, first of all, I thought I was just sharing my knowledge of running a business. But actually, I was sharing my customers' knowledge of running businesses, but also I was learning quite a lot from them about what they were doing and how they were approaching their business. So that helped me to get a few things in perspective.
Mm-hmm.
And as I say, I knew I had to find a niche, and I knew I had to get some pleasure from the niche. The construction industry was a great place to be back in the day. It was a lot of fun. So I dabbled in a few, put my fingers in, I thought we'll have a go at this. Then it just hit me one day. If I'm honest, it hit me when I was driving a van full of meat to Centre Park to take finance.
As you do. Yeah.
So something about it, I just knew it was right. I knew it was the way to go. And I couldn't explain it at the time. It made probably a few months to, in my head, get my head around why it was right and where it was going to go. But I so knew it that I went home that evening, fairly surprised to find that the fit out finance domains were available. I bought the domain and I built a website. Now, I have no web design skills. I'll tell you how few skills I had. Is the website I built in an evening on my sofa watching telly disappeared. And it's never been seen since. That was 3 hours effectively down the pan, but it wasn't, because I did it again, and obviously I knew what I was doing this time. I put the website up, and the next day I got an inquiry from it.
Wow.
So if I needed corroboration that it was good, that was it. There was no going back from that point. I've since, formulated a bit more. I started to understand what's good and, where it fits in and things. But right from day one, it worked. The reason it worked is because it defined the purpose and the plan. And where I'd been, can I lend you money market is a little bit purposeless and planless. Is we need cash. Fit-out finance says you have premises, you're doing something with your premises, therefore you have a business plan. It may not be a lovely glossy business plan, but you have something going on and we are part of what's happening within your business. And everything revolves around that now. It's the plan and the purpose. And the ethos of fit-out finance is quite simple. It goes in and around the premises and is critical to the business. And that is absolutely where we've parked, and it won't change.
Yeah, because I like the idea of that sort of business, because it's not something, and as you've probably seen, and I know most of the sort of podcasts that we've done is very sort of heavily property related, because that's the industry sort of I'm in more
Yeah.
so, and that's obviously why we asked you to come on, because it is a really interesting sort of niche, as they say. Like it's not something that day to day I would have thought about, but I can definitely see why you might, that it's definitely a vital kind of thing to actually need to raise finance on, and it's not always that easy. Because what are the sort of things that you're doing? Obviously, it's anything that goes in, but what sort of things are the typical things you're actually funding?
So I'm sector agnostic. As I say, they have to have premises, which sort of defines the sectors a little bit, but hotels sort of sum up where we fit in very neatly, and I do actually target hotels as a customer base. So you mentioned property. So your average hotel owner will have a very large mortgage, either with a bank or with a specialist hotel lender, probably in the millions.
Yeah.
Their lender on the property will have put a huge amount of emphasis on the valuation of the property. I know you know better than I do, but I'm sure there are other factors at play, but the value of the property is absolutely central to the deal.
Yeah.
Well, that hotel owner then comes in and he says, actually, I want to do a rolling refurb of all my bedrooms. And that's going to cost 10 grand a bedroom. They go back to their lender. The lender says, not really, no, because we've only just taken this on and we're up to our loan to value and we need a bit of experience with you. So then they come to us. I say, well, valuations are relevant because the equipment we finance is worth absolutely nothing. And we know that. That is our starting point, is the equipment is worthless. What's the business plan? What's the equipment? So they'll come to us for their bedroom refurbs. So we sit very neatly alongside their prime lender, who is obviously comfortable with their bricks and mortar. We're financing what you might describe as the rubbish that goes within the bricks and mortar. It's worthless equipment, which is worth a lot to that business. It's mission critical.
Yeah.
As you know, if you refurb your hotel, your occupancy goes up, your room rate goes up, your reviews get better. So it's very much, it's critical to the business, even though you can't put a value on it.
So is the sort of most of the funding then done on an actual sort of the operating side of things? So they'll look at obviously your turnover, the business plan, all of that kind of thing. And what's it actually, is it secured against anything, or literally is it just an unsecured loan to help fund?
So unsecured is an interesting terminology, isn't it? We probably need to clarify it.
Yeah.
You and I know all about it. Most of the deals we do have personal guarantees on them.
Yes. Yeah.
Because, to be honest, I deal with owner-managed businesses, and nearly always the owner being present and being part of the business is critical to the business. So in that respect, some people will call that secured. We and I both know secured in finance company terms means a charge over property.
Yeah. Or an asset of some kind.
Yeah. We tend not to go that route. It can happen. Most of what we do is underwritten on the credit, the people, and a personal guarantee.
And when they're doing that, is that something that you sort of help them write the business plans, or do they kind of where how sort of involved do you need to get, and how long would something like this actually take? Because it seems like a pretty like it's something that I know, putting my sort of lender hat on, if somebody came to us, there's a lot of factors you'd need to take in to make sure you're comfortable with lending to someone on that sort of basis, at least in my view. But I don't know what the lenders you work with are like.
Well, because I exist in a niche, I interview my lenders to make sure they understand the niche.
Yeah,
Um, so, if a lender comes to us and says, yes, we like to finance cars, I think we're not really going to be doing much business, are we? So I talk to lenders about stage payments, about startups, about soft assets. And if we can't have those conversations, then we're not really going to be doing business together. So what I bring to the customer is a lender base who understands what they're doing.
yeah,
In terms of timing, our qualifier is from receipt of information, but in reality, it's measured in weeks rather than months.
that's not too
A
bad.
weekend push,
Yeah,
but quite often within a fortnight, we can get a deal from proposal to pay down.
wow, that is quick.
I would expect them to have some sort of business plan. We're not looking for huge and impressive business plan. I want them to understand where they're going. I want them to understand their own financials. I want evidence that they've thought through, what the financial ramifications are.
Yeah,
But we're not looking for a deep and detailed business plan.
uh,
We're looking for a bit of substance behind the deal, because what we don't want to get involved with is people who are borrowed up to the hilt on everything.
yeah, no,
They've
that's
got a little bit of their own equity, a bit of their own person in the business, but then we're just lending to make the project come to fruition.
yeah, because it is an interesting kind of a real interesting market, and I can see how it can add a lot. What are the sort of rates and stuff in that sort of thing? Because I'm guessing if it's sort of more unsecured, we'll use that term again, but more business sort of funding in that sense, are we looking at obviously much more than your average bank sort of secured loan? But where do they sort of sit, or is there a range that it normally falls within?
Well, the range, it's a wide range, and obviously everyone's rates have gone up. Um, it's going to be in the high to mid-teens, and now these days it's toppling into the early 20s.
Okay, yeah, that's where I thought it would be sort of, you're looking at credit cardy numbers, that kind of, that's how
Yeah,
I generally describe those things.
yeah.
And that's an interesting one, because I was going to ask how the sort of interest rates have actually impacted your sector at the moment.
In absolutely direct terms, we don't really get hit by interest rates. The rates have gone up, but I suppose we're in the secondary lending market. Our rates aren't critical to the business's profit. Obviously, a percent on your mortgage is quite a hit. A percent on your secondary lending over 3 years is not nearly so much a hit.
Yeah,
Also, our rates are fixed for the period. Every deal we do is fixed rate, fixed terms. It's either 3 or 5 years normally, and at the point of drawdown, the rate is fixed. So obviously, you have factored in our costs into your returns.
and
The
is it?
secondary effect is more profound, isn't it? The fact that they're paying more on their primary debt, the fact they're paying more for their utilities, the fact they're paying more for their staff, obviously affects their overall business credibility and, in fact, their willingness to invest in the business. So we get a secondary hit of interest rates and
Yeah,
costs. But say the primary hit is very small indeed.
yeah, because I find it a tougher one to kind of uh, get my head around in terms of the sort of the way that the banks or the lenders, are they banks, or are they sort of family offices, or is there a mix actually?
It's a range. So I don't deal with any high street banks. That's sort of my
Yeah,
view is people know their high street bank. I might be wrong about it. Some of the lenders we deal with are banks, for example, Close Bank, which most people have heard of. They obviously have specialist divisions we deal with. Some of them are really one man and his money.
Yeah.
Some of them are companies that you wouldn't associate with finance at all, but they have a little finance division which we can deal with. But they tend to be people you wouldn't have heard of on your day-to-day journeys.
Yeah, and with obviously going back to the rate bit, with those going up and the economy, taking a little bit of a wobble with the inflation and everything, how is the sort of the actual deal flow and sort of leads that you've been getting in? Has that been impacted? Are you busier than you were with people sort of scrambling for cash, or is it
Well,
kind of much of a muchness?
no, we're not busy with people scrambling for cash because I'm not in the money lending market.
Well, no, yeah,
As I say that, I'm not being flippant there. I'm sure you do. I get multiple emails every day, people trying to give me loans, business loans.
yeah,
Um, I'm absolutely not in that. As I say, it's about the plan and the purpose. So the slowdown is that people are more reluctant to invest.
yeah,
The other side is lending criteria have toughened. They haven't toughened unbelievably. I refer to it as speed cameras on motorways. So whereas we used to get away with a little bit, the lenders are now imposing their own rules. So, where we could be a little bit flippant on what we financed and throwing in some cutlery and things into a finance package, the lenders are going to be a little stricter on it now.
yeah.
So it's tougher. But I think my little journey in finance has made me fairly resilient to the toughening.
Yeah, because
Um,
it's a really kind of a fascinating sort of space, and I think if you've got the people that are looking to invest and sort of spend that money, yeah, it's a bit of a tough time to do that. How many sort of clients do you work with at any one time?
so I don't know the answer to that. A busy month for me would be one where I do 20 deals.
Oh wow, that's a lot.
Um, I deal very closely with customers. It's not a process, not a machine, it's me. And
Yeah,
I want to understand the deal and the customer. Frankly, if the customer doesn't want to talk to someone and be open with them, we're probably not a good fit. So I'll have, 20 or 30 good ongoing customers who come to me with all their needs. And then a number of customers who will just come to me for a one-off, just doing a quick refurb of our restaurant, just need this, and we'll never deal again, or might deal again in 3 years' time.
yeah.
So it really depends. As I say, I'm very much focused on owner managed businesses.
And one of the things that I did mean to ask a little earlier, when we were talking about sort of the payments, is it all sort of repayment based, as in the every payment, it will be a repayment loan, so you'll be paying interest and capital as you pay, or is there lump sums, or is it all,
No, it's
is there a bit of different sort of,
pretty
shall we
much
call it?
all of what we do is 3 and 5 year fixed rate, fixed term, fixed repayment.
Okay,
So
yeah.
you borrow 100,000, you pay back 60 instalments of however much.
Yeah, that makes sense, because that way it sort of, by the end of it, guarantees everyone's kind of happy rather than relying on a big sort of balloon payment or anything like that.
Yeah.
The final question that I've got for you, and this is obviously in regards to the sort of your outlook on where you think things might be going. I know that's pretty sort of broad question, but what's your sort of your vibe in terms of where we are and with the inflation and everything? Do you see that sort of getting better? And obviously, just yesterday, we're recording this on the 4th of August. There was the another Bank of England base rate. So, yeah, where do you see that? Where do you see us going?
And I think there'll be another rise. I'd be very surprised if there isn't a recession. I'm not trying to be dark and bleak here. But
Yeah,
there are some strong signs that the going is tough for people. A lot of my customers own restaurants. I talk to them about the economics of running a restaurant, and you need to be pretty sharp in the industry to survive. So I think, if I'm really honest, I think the remainder of this year is going to be tough for everyone.
yeah,
I'm
I
hoping
agree.
the next year will be the time where things bottom out and start to turn around.
Yeah, that is that is the hope, I think. And obviously, I'm now conscious of the time, and I appreciate obviously everybody that's got to this part, sort of listening in. Where, Mark, are people able to find you if they want to get in touch to obviously work with you going forward?
Um, I'm there on LinkedIn, Fit Out Finance. The, the website is fitoutfinance.co.uk, and my email is mark@fitoutfinance. And I say to all about people, I'm very happy for people to phone me, email me, whether it's just a general chat about funding or the market or whatever.
Yeah.
Really happy to give thoughts and ideas to people.
That is perfect. And obviously, I want to thank you again so much for coming on. And this isn't a space that I'm familiar. So I've got, we could probably fill another hour and a bit, but it is 30 minutes in finance. So we're going to have to cut it there. And I'll make sure I've got all of Mark's contact details and everything in the link in the description below, with the links to his website and obviously his LinkedIn page. So if you do want to get in touch with him, feel free to. And obviously, thanks so much again for your time, Mark. Really appreciate it.
Thank you,
And we'll
David.
have to get you on another time once to see how things are going in a bit.
Super. Thank you, David.